Hello everyone, my name is Nick Rohrer. I'm a junior in the AIM program covering domestic technology. Today I'll be presenting Viavi Solutions, ticker VIAV. Viavi Solutions is a global provider of network testing, monitoring, and assurance solutions to communication service providers, enterprises, network equipment manufacturers, civil government, military, and avionics customers. Viavi operates through the following segments: Network Enablement, representing 65.3% of fiscal year 19 revenues, Service Enablement, representing 9.1%, and Optical Security and Performance Products, representing 25.6%. Viavi was founded in 1979 and is headquartered in San Jose, California. Viavi's Network and Service Enablement segments, collectively referred to as NSE, provide an integrated portfolio of testing solutions that access networks to perform build-out, monitoring, maintenance, and optimization tasks. Customers in this space include AT&T, CenturyLink, Cisco Systems, Comcast, and Verizon. The OSP segment primarily offers anti-counterfeiting security technology and 3D sensing optical filters to industrial, government, and healthcare clients including 3M, Lockheed Martin, and SICPA Holdings. Over the last 3 fiscal years, Viavi has focused on driving operational efficiencies by restructuring the SC segment, investing in significant growth areas, and refinancing convertible debt. These initiatives have allowed Viavi to become a market leader in the network performance monitoring and diagnostic space, based on completeness of vision and the ability to execute on that vision, according to Gartner. Financially, these initiatives have resulted in free cash flow growth at a 34% CAGR. Additionally, operating margin improved 500 basis points from 12.5% to 17.5%. The next phase in Viavi's growth strategy can be broken down into 4 pillars. First, Viavi seeks to defend and expand its base business in NSE and OSP. Management expects these core segments to grow revenues at a 2 to 5% CAGR through fiscal year 22. Second, leveraging secular trends in fiber, 5G, and 3D sensing will expand the market and drive growth. The 2020 Gartner Market Guide for Network Performance Monitoring and Diagnostics report suggests that by 2024, 50% of network operations teams will be required to re-architect their network monitoring stack, up from 20% in 2019. Additionally, investment in augmented and virtual reality, autonomous vehicles, and the Internet of Things will further expand the 3D sensing market and generate long-term revenue opportunities for Viavi. Third, management is striving for a disciplined corporate development strategy through synergistic M&A to increase and leverage operating scale in growth areas. By decreasing its debt-to-equity ratio over the last 3 fiscal years from nearly 120% to under 80%, Viavi has freed up leverage to capitalize on synergistic and accretive acquisition targets as they are presented. Finally, Viavi seeks continual productivity improvement in operations, R&D, and SG&A. With these initiatives, management expects a base case EPS CAGR of 6 to 10% through fiscal year 22. Retaining market leadership in an area experiencing significant secular tailwinds, coupled with these improvement operational efficiencies, will allow Viavi to drive value for its stakeholders. For these reasons, it is recommended that Viavi Solutions be added to the AIM Small Cap Equity Fund with a price target of $14.24, representing a potential upside of 27.1%. My investment thesis is based on the following drivers. First, the 5G and fiber build-out. The adoption of 5G will require an optical fiber upgrade and build-out as legacy copper line networks are decommissioned. The 5G infrastructure market is expected to grow at a greater than 50% CAGR through 2027, nearing $48 billion. Annual total addressable market for field equipment testing is expected to be about $300 million, of which Viavi expects to capture 25 to 33%. This build-out will drive 5G and wireless revenue growth rates in the high single-digit to low double-digit range through fiscal year 22. Next, 3D sensing. Optical filters and diffusers are implemented in smartphones for facial recognition biometric authentication. With over 1.5 billion annual units in the smartphone market, the total addressable market for optical filters and diffusers is currently estimated at $125 million and is expected to double by 2023. Viavi currently controls about 15% of this market and expects to reach 33% by 2022. Applications of this technology extend beyond smartphones and into augmented and virtual reality, autonomous vehicles, and the Internet of Things. Accelerated development in 3D sensing applications will be further accretive to Viavi's revenues in the long term. Third, operational efficiency. Viavi's M&A strategy through fiscal year 22 seeks to acquire competitors in spaces that Viavi already operates and in attractive growth target areas. M&A transactions will either be accretive to the top line or provide operational synergies. Since fiscal year 17, Viavi has executed 4 transactions. Over this period, operating expenses as a percentage of revenue have decreased from 70% to 52%, resulting in significant margin improvement. Additionally, individual sales productivity has increased 40% since fiscal year 17, and the number of sales reps at or above quota is increasing each year. Decreasing leverage over the last 3 fiscal years from debt to equity of nearly 120% to less than 80% has prepared the balance sheet to make strategic acquisitions as they become available. To reach an intrinsic value for Viavi, a 5-year DCF model was constructed. Using a terminal growth rate of 2% and a cost of equity of 6.09%, an intrinsic value of $15.26 was reached. A sensitivity analysis of plus or minus 50 bips on the terminal growth rate and plus or minus 50 bips on the cost of equity ranged from $12.35 to $20.07. Additionally, a price to sales multiple valuation was conducted using a blended next 12 months price to sales multiple of 2.37 times, resulting in a relative valuation of $12.47. Further, an EV to EBITDA multiple valuation was conducted using a blended next 12 months EV to EBITDA multiple of 10.67 times, resulting in a relative value of $12.92. By weighing the 3 models 60-20-20, a price target of $14.24 was reached, representing a 27.1% potential upside. Viavi does not pay a dividend. Next, I will discuss a few risks. First, cyber threats. Viavi's operations within currency technology, mobile security, and e-identification for both corporate and federal clients persistently pose a significant threat to the confidential data and information of Viavi and its clients. A cyber attack could result in costly lawsuits while also jeopardizing Viavi's business relationships and future revenue opportunities. Next, reliance on network development. Viavi's NSE revenues are heavily reliant on service providers' capital expenditure on network development, specifically the 5G network rollout. Any events, such as a market downturn, that negatively impact the 5G network rollout would have adverse effects on Viavi's NSE revenue stream. Finally, virtualized networks and software solutions. As the markets for the NSE segments are increasingly looking toward virtualized networks and software solutions, demand for legacy hardware products and barriers to entry will subsequently fall. Finally, to touch on management, Mr. Oleg Kakin has served as president and CEO at Viavi since February 2016. Mr. Kakin has served on various boards and executive teams throughout the electronic technology industry. And Mr. Amar Melitera has served as CFO and Executive Vice President at Viavi since September 2015. I'm looking forward to answering any questions you may have. Thank you.